Hey guys, I'm back. What's today? Today is Wednesday, September 27th, you guys. And so I'm back. I'm Ashley Pickens here in Memphis, Tennessee. You know, I've been in real estate since 2006 and I auction off foreclosures for the banks. Okay, I am an auctioneer, right? So let's jump in today's episode of Ain't That Some Sugar Ham Iced Tea. Y'all know what that stands for. On today's episode, it's the first letter of each of those words, sugar ham iced tea. Today's episode. So I got another email today, right? Because you know, things are slow, things are tight. So these banks are coming up with all kinds of things. So today's email, you guys, today's email. Okay, remember yesterday's was the HELOC, with you starting off at 1.9%, going up to 7% in 6 months or something like that. Today's email, you guys, if this is not a warning sign, I am ringing the bell. If this is not a warning sign that trouble is coming, here we go. The subject of the email says, no score loan program, opening doors to home ownership. No score loan program. Shout out to everybody from 2008 who said it's not going to happen. It's not, the market is not going to crash. This is not 2008. Looking a lot like 2008. No score loan program. Okay, let's see what the benefits are. Excited to introduce the No Score Loan Program, helping clients with limited credit history in achieving homeownership dreams. Okay, so loan program benefits: down payment as low as 3.5%, seller allowed to pay up to 6% of closing costs, flexible underwriting guidelines. Flexible underwriting guidelines. They know they're flexible if you don't have a score. Permits non-occupant co-borrowers, so they don't have to live with you to be on the loan. So that means if you don't make enough money, you can call your mama and she can hop on this loan with you that you don't already qualify for, that you don't have the score for, that you don't have probably the down payment for. And because it gets better, it gets greater later in this email. Higher DTI ratios. They allow higher debt to income ratio. So what happens? So when you put all of this in a bowl and you mix it all up, right? And you just get a whole big bowl full of sugar ham iced tea. No score home loans. But it's not 2008. Mortgage restrictions are tighter. Not from this email. So I was about to respond back and be a petty Betty and be like, you know this is some trash, right? But I didn't do that. No score home loans. Here we go. Here we go. So that is a definite indicator that things are getting tight at the bank, right? Because mortgage applications are down, right? They already said we're not going to have any money by Sunday. Isn't that what they said? So it's not like anybody's opening up checking accounts or savings accounts, right? The tellers are just there rolling pennies and watching the view at the bank right now. I pulled up at the bank yesterday at like 3:30, and I just knew. I'm like, it's going to be a line. It's 3:30. Y'all, so at first I was going to drive by. I'm like, let me drive by and see how long this line is. Y'all, I drove by, not a soul in the drive-through line. So I hit the block, came back. I'm like, ain't nobody at the bank. The banks, what are banks' primary purpose? To make money. And they are not making money right now in this economy. So now what they come up with? No score home loans. So yes, flexible underwriting guidelines, higher debt to income ratios, and seller allowed to pay up to 6% of closing costs. Somebody asked me, you know, hey girl, she asked me, how do I feel about like Zillow has this 1% down payment loan. How do I feel about those? And I stand on this like I stand on not liking rent to own deals. I do not believe anybody should buy a house if they don't have any money in the bank. Nobody should be buying a house with absolutely no money in the bank and no skin in the game, right? So what do I mean? This 100% financing, we're going to give you down payment assistance. You don't have to pay your closing costs. You know, we're going to waive the appraisal fee, not the appraisal fee. And these people, I got to wait until I get paid to put down the earnest money. You don't need a house, baby. You just need to hold what you got a little bit longer until you're ready to buy a house, right? Because then you're going to be seeing me with those conditions. I do not believe anybody should buy a house without any money, right? So I get down payment assistance does help a lot of people, right? Especially people who don't have, you know, a ton of money saved up. But still, by no means do I believe that you should, like, you shouldn't have any money in you shouldn't put any money down to buy a house, right? So, in these 100% financing, baby, you are upside down as soon as you sign those papers. Upside down, right? You didn't put any money down, 100% loan, upside down as soon as you sign those papers. So I just don't believe. I think you need to be able to have some money in your bank account. You need to be able to put down some down payment. I just think it's just a good idea, right? Right. So, of course, you know, I'm like, what are other tactics that banks use, right? When things get tight, right? When things get tight, what do banks come up with? Because we're going to start seeing them. We already have started. HELOC, well, here we come. $250 to open up your checking account. Now we got no score loan programs because, baby, they're not making any money, right? Jamie is not making any money. Well, Jamie might, but these smaller banks are not, right? So what tactics do banks use, right? Here's a couple. High yield savings accounts with strings attached. Banks will offer you higher interest rates, but often there are stipulations like maintaining a certain balance or setting up direct deposits. Introductory interest rates, like that HELOC loan yesterday, start off at 1.99, end up I was about to say inhale, end up at 7-8%, right? Let's see, what else? Fee harvesting. Banks might introduce new fees or raise existing ones to generate revenue. These can include everything from account maintenance fees, balance inquiry fees, to paper statement fees, right? Asset-backed securities. On the corporate side, banks may bundle bad loans into asset-backed securities to get them off of their books. And calling loans early. Banks may exercise clauses in business loans that allow them to call the loan in early, forcing businesses to pay back the loan in a shorter time frame than initially agreed upon. Baby, that's what's commercial real estate. Commercial real estate. And zero down mortgages, making it easier to secure a mortgage by requiring little to no money down until you realize that you'll be underwater almost immediately if the property values decline because you ain't put no money down. You don't have any equity. Boop, whoop, there it is. So that's what's happening on today's episode of Ain't That Some Sugar Ham Iced Tea. Okay, so moving right along, you guys. No score loans in September. So, of course, one of you all sent me this. My friend who always hit me up about daily job cuts. Have y'all not been to the website, dailyjobcuts.com, right? Because they are keeping us informed. Did you know eviction notices piling up in LA? From February through the end of August, approximately 50,000 eviction notices were filed by landlords in LA. A spokesperson said 96% of them involved non-payment of rent, and landlords were owed $186.5 million. Baby, look, we know. Look, we've talked about it before. They said the eviction notice hotspots: Hollywood, Fairfax, Woodland Hills, Westlake, downtown LA, North Hollywood. If y'all live in LA, what's going on? California, LA. So we already talked about this, you guys. 5 million renters. 5 million renters have not paid since, I pulled up the numbers. I actually pulled up. Remember we said 5 million renters have not paid all year, and 5 million mortgage homeowners have not paid their mortgage all year. 10 million people have not paid their housing payments all year, all 2023. Actually, let me circle back and give you the real numbers. How long has it been? I went all the way back to, what is this? January 2022. Because a couple videos ago, remember January 2023, numbers were still the same. January of this year, 5 million people had not paid their mortgage. 5 million people had not paid their rent. I went back even further. January 2022. Let's see what it was looking like in the United States, January 2022. So we had, shows that 6.7 million renter households were behind on rental payments. On average, renter households were behind 2 months behind on their payment. This was in January 2022. An estimated 12% of renter households were not at all confident in their ability to pay their rent on time. January 2022. 3.17 million renter households feared eviction was imminent in the next 2 months. Now keep in mind they had a moratorium, right? So you couldn't evict anybody then. You couldn't foreclose, you couldn't evict. So this was January 2022, where 3 million renter households feared eviction. 6 million renter households were not paying their rent in January of 2022, right? So I understand this figure of what, how many millions of dollars these landlords hadn't gotten. And keep in mind, you guys, I said this before, landlords, well, yeah, landlords, these investors who own these properties, I know a lot of us think they're like hedge funds, like BlackRock, Blackstone, they own all these properties. No, y'all, the average investor is somebody who owns, I think they said, what, 5 to 7 properties, right? It's just regular people, right? So if you have bought a second property and they're not paying rent, right? I mean, you're counting on that rent to cover that mortgage 9 times out of 10, right? So if you got somebody living in your rental property, not paying rent, you got to cover that mortgage too, plus your own mortgage. And if you got multiple people not paying their rent, did y'all know, fun fact, I think what percentage of investors own? So according to national data provider CoreLogic, investors accounted for 27% of all single family home purchases. A quarter of the properties are owned by investors. So what's gonna happen? These people not paying their mortgage, investors not getting paid. I told you, the investors, I see it every day. They're on my list. They're on the public notice list. Investors are getting foreclosed on. And it could be the ones who have rental properties and these renters aren't paying. I mean, when you got to pick between your own primary mortgage and your rental property mortgage, and you only got enough money to pay your primary, you're going to pay your primary, right? And you're going to let that rental go. So a lot of these investors are ending up on the foreclosure list. You guys, I see it all the time. Lots of investors on the foreclosure list. Also, lots of investors getting foreclosed on by these private money or hard money. Investors jumped in when it was good. The market flipped so fast, you guys. Investors got private money, hard money, bought up properties. The market flipped, and now you can't get off of them, right? You can't sell them. And these hard money lenders are coming back to collect, right? So now they're foreclosing on these investors. So that is LA, but LA is not the only place. I mean, in New York, about to get hit hard because these Airbnb, baby, I know they were counting on the holiday season to get some business in their Airbnbs, right? You know they were. You know they were. Probably thinking they were going to be booked and busy. They said, what, 77% of Airbnbs, like, had to stop operating in New York? Y'all, And you know they bought them just for Airbnb to cover their mortgage. Yeah, these people, we about to be in trouble. Airbnb, commercial loans, people behind on their mortgage and default. What else we got? Student loans, government shutdown, Ukraine. No, they're going to be all right. They're going to be all right. Everything, just, we're going to see. We are going to see. My prediction is interest rates are going to go up again before the end of the year, right? We're going into the fourth quarter. People don't really buy in the fourth quarter, even in a good real estate market. People don't really buy in the fourth quarter, right? It's the holidays. Nobody really wants to move in the holidays. You don't want people in and out of your house. Like if you have your house on the market, you got your Christmas tree and gifts. You don't want people in and out of your house during that time. You know, families coming over. So fourth quarter is already a slow quarter for real estate, right? It's going to be real slow. It's about to freeze up. The winter is about to freeze up the market. So I don't think anything is going to happen. They're going to put a moratorium, a holiday moratorium on foreclosures anyway in December. It's like halfway through December, the beginning of January. It's going to be a moratorium. They won't foreclose. But I think come maybe first, second quarter, let's get it. They're going to start pushing the properties through the pipe. We'll see. A lot of people are saying second quarter is when it's coming. These interest rates are going to go up again, right? These jobs going to start laying off. Baby, it's just a perfect storm. What have I said before? The atmosphere is conducive for real estate downturn, because we don't say recession. All I'm saying. So, you guys, that's what I got. I try not to let the videos be too long. So, you guys, we just gonna see what happens. We gonna send me articles. I like to see, send me stuff. It's gotta be real estate related. Don't send me foolishness. If it's real estate related or foreclosures or something like that, send it to me. I'll read it. We'll go over it. I'll give you my opinion on it. So the Auction Accelerator. Somebody asked me what county was the house in. Remember I said a house went up for auction yesterday. The house was worth $1.1 million and it sold at auction for like $330,000. It was in San Diego, I believe. It was in San Diego County. So yeah, auctions still alive and well, So, sign up for my newsletter. All the links are below. All the links are below in the description. The Auction Accelerator, if you want to learn how to bid on properties, 1.1 million, and they got it for 300,000. Maybe that's a steal. And keep in mind, all auctions are not cash only. A lot are, but some do offer financing, you guys. There's a lot. Auction.com, Zone.com, Realty Bid, Realty Track. They have financing options. You just have to filter it for financing allowed. So keep that in mind, you guys. Check out the Auction Accelerator. I teach you how to bid, how to estimate repairs, how to win at the auction, you guys. Use code THANKYOU because I love you guys. And I hit 10K on Instagram. So I'm on Instagram, Your Agent Ashley. I appreciate you all. You guys, where are y'all? Tell me where y'all are. Y'all know I'm in Memphis. Memphis, Tennessee. Where are y'all? I'd like to hear where y'all are from. What's going on where you are? So comment below. Your Agent Ashley on Instagram. You know what to do. Like, comment, subscribe, hit the notification bell. You know, I love my commenters. I always try to comment back because I love you all. And that concludes today's episode of Ain't That Some Sugar Ham Iced Tea in the real estate market. We are going to keep watching and waiting and seeing what happens. And that's what we're going to do. And I will see you all tomorrow. And I love you. Comment, like, subscribe. I will see you tomorrow. Bye.